Good afternoon, everybody. I'm Dan Hussey with Zaner Hedge, bringing you a strategy of the day update here for September 14th, 2023. Remember, trading futures involves risk and is not suitable for all investors. And everything we talk about here today is just my own opinion and not a direct trade recommendation. So I want to take a quick look here at November soybeans, that new crop bean. Coming out of this oversold territory in the daily RSI that it barely made its way down into. Past periods we've seen, several days to a couple weeks, spent in oversold before reversals kind of set up, or markets snap back and revert back to the trend that we're perhaps in, because arguably since at least May of this year we've been in somewhat of an uptrend for soybeans, right? We could over the last couple of days have been breaking that uptrend, at least from the simplest definition of it, in terms of this upward sloping trend line that was against the lows, kind of aligned with where the 55-day moving average was at the same time, and certainly was an area that the market was watching. We tested, held, bounced off of, and then actually broke below. And you can make the case today are kind of coming back up to test old broken trendline support now as resistance up into almost where that 18-day moving average is, which would be a similar idea. Now back below that 18-day moving average, the market's coming up to test it as resistance. So we really are, in a very real way, finding if there are bears or if this market is going to roll over, right? We are at kind of that first point where we would expect to have seen that reaction. It was really more around that 560 area in terms of headline level, just because of, the last couple of days we had been flirting up and down above that handle. It seems like the market is using it as some kind of important one for the time being, or at least the technical trade. Okay, yesterday we came and bounced off the 200-day moving average, or just a couple pennies ahead of it. It was down at 1330. Okay, this is the second time we've seen this average hold over, since mid-August, when we first moved back above it. It held as support there in a pullback on August 23rd. That resulted in a 4-day rally back up above $14. Yet again, we've tested that 200-day moving average down around 1330. It's now into the second day of, if it's going to mimic what we did then, a rally that could take us back towards $14. That would mean we chew through some of the resistance levels we just mentioned. And there's yet another one we'll look at on the 4-hour chart. You can kind of see it here, though, on this daily. There's definitely a trend line against the highs in a channel that we've been heading lower since the peak of around 1410 there on the 28th of August. A couple other levels just to look at here on the daily chart of soybeans. This 100-day moving average at 1302. Aligns pretty closely with where there's another maybe channel or low to low supportive trend line here. There's the June low to August low trend line. Comes in around the same level and would kind of be the bounds of maybe a wedge or a big triangle formation in this market with 1, 2, 3, 4, 5. This would be the sixth leg within that wedge forming in the soybean market between 14 and change highs and lows effectively holding $13 and keeping the narrative of beans in the teens alive. Resistance since June of 2022 has been at 1380 to 1440. That 60-cent price range has found every substantial top that the soybean, at least November 23 soybeans, has found. And we're going to continue to kind of, as we are very much finding that area as resistance in this last run-up, going to continue to kind of monitor that as the breakout zone and potential, right? We start to go back above $14, contract highs become involved, and then now, for November, at least for November 23 beans, anything above is open air, but we'll have to look back to continuous contracts and past years to see how high things could go. But we equally, you start to break down 1330, and let's take a look at that 4-hour chart now, because there is a couple kind of technicals that brought us into this point that I think are important to look at, and then a few more that are adding to the bearish trend or a reason that we could continue lower here that to watch for in the near term as well. All right, so from COVID lows 860 up to the 1440 highs at 1155 area, for at least the December contract was basically 3 ways back into a big 50% pullback. Market rallied up, broke through any kind of 50% retracement, short that might have, wanted to be sold into by bears. After we broke above those 61.8 lines, the market pulled back into its 50% retracement long. So from, 11.30 lows up to the swing highs, the first one there at 13.75, but really we're concentrating more on the swing that was up to 14.35. That 12.82 50% level, market pulled back, held it almost to the tick. That has an upside swing target of about 15.06, and after that that low formed, let's go back down to the 4-hour chart now. After that low formed and we started to rally back up in the soybeans, we found initial resistance there, or a gap, I should say, through what should have been resistance, but resistance was found at the original open gap up at 13.82. But we found the market ran up and tagged that 16.18 line of the 14.35 swing high to the 12.82 low. In other words, the market's taking 2 steps forward in the upside, 1 step back, 2 steps forward, 1 step back of just another degree. So after quote unquote breaking that short, or hitting stops for where 50 sellers at a 50% line might be, the market immediately, and we've had 250 backs now on the long side, similar to what we saw on the larger time frame as well. Lows to high here, held a 50 back, actually went up to its target at 14.04, and really the market, if you take that same 12.82 low to the highs after here, that 13.30 1 1/4 61.8 line is right where the market came down to. So unable to kind of break below, a little bit of a double bottom. Definitely sets up for, on this 4-hour time frame, a head and shoulders with a neckline at 13.30, which to me, if we're building into a bullish price pattern or a bull flag against resistance, which is what this bigger pattern to me represents still, these levels at 13.30, and certainly if you take even a bigger step back, you can see yet maybe another neckline, right, with 2 lows from 12.80 and 12.50. If this whole thing's kind of skewed and slanted on a diagonal upwards, necklines would be around $13, or that trend line break that we talked about earlier at 13.02, which is where the 100-day moving average is. That level would be, to me, is very technically significant for acceleration to the downside. Below there's really nothing again until 11.30 and till below 12. I mean, the markets prove that time and time again. Every time down, when we break there, we seem to just head on down all the way down, right? There's just, it was, prior sell-offs have been weeks on end, right? When that occurs, it's supported till it's not. And in the short term, with the downward sloping trend line against the highs here, we are into the first resistance for soybeans off that high, right? So watching those 2 necklines, watching these 2, the head and shoulders pattern potentially break, but knowing that there is some technical reasons to not give up on the bull side just yet. And really, when you take a step back, right, this has been a big range, and you can make an argument in ranges on how both sides, right, find plenty of reasons to trade their trend. One concerning factor, though, still for the bears here, and not, bulls, not just this downward sloping trend line against the highs, and of course, keeping, I think, maybe a bit of the trend, lower in the near term, unfortunately, until we get a break above and a close above this. Well, we're just about there at 13.62. We don't have much confidence in it. So off the high, 14.09, highs to lows here. We actually traded a 50 back short. That trade went to its target, or that, that 2 steps down, 1 step up, 2 steps down into its target at 13.45. Next in the series is drawn from 13.84, or the highs of the month, 13.85, down to the lows of the month. So it's 50%, halfway back for the month right now, is the resistance we're into here into 13.60 to, the 61.8 line still holding at 13.65. So this is it. We break above this level. I don't see much in the way until, the full 14.09 highs to lows here. We'll probably go up to 1370, really to 1382 to 1385 to tag that 618 line on the short side. And if that's the case, then now we the market objectively has another shot at taking out 14 and rallying higher. We don't have a great news cycle with the exception of potential exports and other things that are going to drive and like be headline trading now because we're through WASD for this month. We've got, of course, conditions reports coming out every week and exports coming out every Thursday. But outside of those things, which certainly could get surprising, I'm wondering if we're not just going to trade a technical market here, which has been bottling up, for soybeans for quite some time in between ranges. And we can have some clear, a couple clear levels here, which in the short term is basically bullish above 1380, bearish below 1330, and a 50-cent range where you may, want to take a stand one direction or the other. But I feel the need to get protected below 1330, and I feel the need to open up the upside above 1380 in this environment because of the way, the price action's just, behaving. And the fact that the chart gives us a couple levels to look at that, hey, we go above or below these levels, there's good reason to consider there could be, not necessarily the end-all be-all trend for either market, but a good technical move one way or the other, right? Shorts would probably continue to cover. You'd start to see longs want to rush in above 1380 and 14, driving the market higher, right? People start chasing whatever. Below 1330, I think they'd start to get that panic selling again. I think $13 is a slippery slope, and there's a reason, right? The trade becomes incredibly one-sided below these levels, and we head lower. And we could certainly see headlines shift in those directions if everything the USDA is telling us comes to fruition or even is better than that. Hey, let's play devil's advocate for a second, right? Or we see walkbacks in demand, right? We've seen that happen, but in the past, and you can't discount that is always on the table. But for the time being, it looks like the bears have more to lose today and to give up if a few key levels might break. And we're right at the precipice of maybe that happening. So, all right. Well, thanks for joining me. Be sure to check out our Strategy of the Week seminar I do where we cover this market and a lot more every week. Here it goes with a video that go out here this afternoon. You can sign up in links in the comment and information section of this video. And check out our new Ag Hedge hotline where our chief market strategist, Ted Seifried, breaks down his market analysis in a quick call every day to update you on where market price action is taking us. So with that being said, everybody, sign up links for that are also in the information and comment section of this video. Have a great day, everybody. I'm Dan Hussey with Zaner Ag Hedge. You can give me a call at 312-277-0110. Find me on Twitter, Facebook, or shoot me an email at dhussey@zaner.com. Have a great day, everybody, and we'll be back with you as price action develops. Take care, everyone. Redo that ending.